Okay, let's unpack this. Our mission today is a deep dive into Vertiv Holdings Co. VRT, the ticker symbol, $70 billion market cap giant. We're analyzing their business model, their current investment profile, using the latest corporate reports. And this is a really crucial company because, well, they're basically the core plumbing for the global data center sector. We need to know if this stock, which has flown so high, is still a smart buy for you.
Yeah, and what's interesting is VRT isn't exactly new to the scene. They've been providing this essential infrastructure, things like power management, UPS systems, thermal management too, since way back in 1946.
Wow, okay. So a long history.
Long history. They're kind of the essential, maybe slightly boring utility provider that keeps the internet running behind the scenes.
Right, but boring doesn't really capture it anymore, does it?
Yeah.
Because here's where it gets really interesting. VRT is now seen as a primary structural beneficiary of this whole AI boom.
Exactly. They're transforming from just a legacy provider into, well, a technology leader. They've got this strategic partnership with NVIDIA. Okay.
Specifically to develop these next-generation 800-volt DC power solutions. That's 800 VDC.
And why is that voltage, that 800 VDC, so important?
Well, think about it. Standard data center racks, they typically run on 48 volts DC, 48 VDC. That it just cannot handle the massive power demands of modern AI clusters.
Right. The power draw is just exploding.
It really is. When we talk about needing to support like 3 or even 4-digit kilowatt rack density, that's not just a lot of power. It's generating heat like dozens of space heaters packed into one rack.
Okay, yeah, that's intense.
So 800 VDC isn't just an upgrade, it's an essential leap. It's the infrastructure needed to safely power and manage these incredibly dense systems and cool them, crucially.
Exactly. And that shift means their core products, I'm thinking specifically of those highly specialized liquid cooling systems, they're not just an expensive option anymore. They're basically an operational necessity to stop these AI servers from, well, melting down. And the financials, they really back this up dramatically. If you look at their Q3 2025 snapshot, the momentum is explosive. Revenue hit $2.68 billion. That's a 29% jump year over year.
29% is huge growth for a company this size. But, numbers in the rearview mirror, they only tell part of the story.
Sure.
To really get a handle on VRT's future, we need to look at that forward velocity. And their organic order growth, that soared by approximately 60% year over year.
60%? That's stunning.
It is. And that growth has led to this massive, almost guaranteed pipeline. A $9.5 billion backlog of orders.
Yeah, that $9.5 billion backlog is just enormous. It gives them incredible visibility into future revenue streams, practically guarantees growth well into 2026, maybe beyond. And what's equally impressive, I think, is that even with this rapid expansion, they seem to be executing well on the operational side. Their adjusted operating margin improved to 22.3%. That shows they're getting more efficient even while scaling like crazy to meet this AI demand.
Okay, but now we hit the valuation puzzle. Because if you pull up the daily stock chart for 2025, the stock has just climbed relentlessly. It's trading right now around $187 a share.
Right. The market has definitely noticed all this success.
So that raises the big question. Is all that spectacular future growth already baked into the price?
That's exactly it. Their price-to-earnings ratio, the PE, is sitting at 67.7x right now.
67.7.
Yeah. And just to give you some perspective, that is more than double the industry average, which is around 30.8x.
Wow, okay.
So a valuation like that doesn't just expect success. It demands perfection. There's almost no room for any execution error at this kind of price level.
So how does the market justify this? If we connect this high price to the bigger picture, it seems like the justification comes down to two main structural points, right? First, that almost unlimited AI demand driving the whole sector.
We're the secular trend.
And second, VRT's own stated goal of reaching a sustainable 25% operating margin by 2029.
Right. But, we can't ignore the headwinds here, the things that challenge that perfection narrative. A key risk remains those persistent 25% tariffs on components coming from China. That definitely creates margin pressure.
Are they managing that?
Well, VRT says they're working on mitigation strategies, finding alternative sources, maybe passing some costs on. But that cost pressure still exists. It hasn't vanished. And we also saw some regional weakness, specifically a 4% revenue decline in the EMEA region, Europe, Middle East, Africa.
Okay. 4% might seem small compared to 60% order growth, but
it shows demand isn't uniform everywhere, right? There can still be pockets of softness.
Okay, so putting it all together, what does this mean for you, the potential investor. The average analyst rating is strongly buy, reflecting that long-term AI story.
But the reports we reviewed, they pull back just a bit. They suggest a more cautious stance, maybe a hold or perhaps a conditional buy.
Conditional buy. Okay.
Yeah, the consensus really, because of the sheer weight of that short-term valuation burden, is that you should probably only consider entry during short-term pullbacks or corrections,
So wait for a dip.
basically. If you're looking to build a long-term structural position in this, AI essential company, the suggested entry range seems to be specifically around the $160 to $170 level. And maybe use a phased buying strategy, don't go all in at once, to manage that volatility.
Right. So VRT seems like structurally, it's a necessary long-term holding. They provide that essential physical gear that underpins the entire AI data center market, a market people expect to balloon to, what, $1.5 trillion by 2030?
That's the projection, yeah. Huge number.
Huge. So
Yeah.
for your final provocative thought as you consider VRT, beyond the immediate noise of the next earnings report, say Q4.
Yeah, what you really need to monitor are those operational risks and milestones. Watch very closely for clear signals about how successful their tariff mitigation strategies are actually proving to be. That impacts margins directly. And crucially, keep an eye on the official launch timing of that game-changing 800 VDC product line they're developing with NVIDIA. It's currently slated for the second half of 2026.
So still a ways off.
Still a ways off. And that timeline, arguably more than any single quarterly revenue figure, could dictate VRT's next major stock movement. Any delays there could be problematic given the current valuation.
Got it. So watch the margins, watch the tariffs, and definitely watch that 800-volt product launch schedule. Lots to keep track of.